Hey, good morning, traders. All right, I wanted to take a couple minutes to update us on the macro situation. I have made a couple of posts recently about, first of all, us reaching our target number 3 on SPY. So in this video, I'm just going to cover 4 or 5 charts that we've been tracking for macroeconomic indicators and the situation of both the stock and the crypto market. We're going to look at, first of all, the dollar. We'll take a look at the SPY, possibly gold and the VIX, and then we'll end with Bitcoin. All right, guys. So I've got the dollar chart pulled up first, and I'm zoomed out to the monthly view because really all I want you to make a note of is we have been in this uptrend channel since 2009. And that is also coinciding with our secular bull market. All right, so if the dollar drops below this channel, that's where we have maybe one more final blow off top in the market before the market recognizes we're going into a sort of hyperinflationary depression as the buying power of our dollar decreases. So you can see where we're at right now. I'll zoom into the daily so you can see a more granular view. We've been flirting with the bottom of this channel really this whole half a year, this last half of the year. And right now we're headed back down to challenge the bottom parameter of that channel once again. Now, if the dollar pops again from the bottom of this channel, it grows stronger, and that should initiate more of a pullback in our markets. Okay, so I'm on over to the SPY, which we have been tracking closely because this is where it all starts, guys. The crypto market is not separate from our stock market at this point, especially with those institutional investors driving the cost of high market cap cryptos like Bitcoin and Ethereum. And so I had 3 targets printed. I've been talking about this for 2.5 years, something like that, somewhere around that time frame. And I've got some things drawn on the chart here. Well, in the short, what I want to say, I want to keep this video fairly short because I don't want to just repeat all the talking points I've repeated in the past. We've reached target number 3. I had 3 targets drawn out here. Let me get out an arrow so you can see what we're talking about. First target we almost reached. I kind of had a feeling we weren't going to touch that completely because of this white trend line here, which comes back from somewhere, but that's important resistance. So at that point, I sold, bought back once we touched here our support. And then I stayed in the market. Actually, I did not sell once we reached target number 2. I stayed in the market here. I think that was a pretty good choice because it was just sort of chopping sideways anyways, though we did go a little bit higher before we dropped. I just stuck in the market at this point. All right. And then we came all the way down. I was not worried, however, because I did have this target 3 as my third and final target. And I guess let me pause the video so I can zoom out and show you the Elliott wave and the cup and handle that gave me this target number 3. All right, it was too messy here. I don't have this categorized properly to delete some of these items. But what I did do is color code, first of all, the cup and handle pattern that I spotted. And what I did is I drew a line from the bottom of this cup to the neckline here. And from where we broke out here on this handle, our target ended up being 670. And remember, I said all along the target for me was 670 to 700. That's where I pull out. Though we could go higher, we could go way higher. If I'm being honest, a blow off top is hard to call. But my main goal here is to preserve capital. So at this point, I have withdrawn my funds from the market just to see where we go at this point. I have some assumptions printed out here. I'll talk about in just a second. But now let's take a look at this Elliott wave. And I've said all along, I am not an Elliott wave chartist. However, I do know the basic imprints that it creates on the chart. First wave is rather long, then we drop. Number 2, 3 is longer, and that was longer. We drop. This would be number 4. And 5 is just as long as 3, if not longer. And that, again, coincided with the cup and handle target. Took us to 670 to 700. All right, so now I'm going to zoom back in to the daily. All right, here we are at the daily. And what I want to talk about is basically just 2 things here. First of all, this resistance line. Notice how we've come up into this resistance, which has coincided precisely with the end target of the Elliott wave and the cup and handle pattern. We reached target number 3 barely, though I said we could go to 700, and we still could. I chose to sell here once we reached that target. And we have since dropped from both the target, the end target of the cup and handle, the end target of Elliott wave, and this resistance channel here. All right, all three of those. All right, so this is just a theory, but I think we, as the government is shut down and as Trump continues these tariff wars with China, this is going to continue to stir up fear in the markets, and we may see some things we've never seen before with government shutdown. I'm expecting the unknown. Of course, this amount of uncertainty will always cause a little bit of panic in the market. And if we do come down to further, we would come down to around 600 to 610. 600 would be the simple moving average. I don't know where the EMA is, estimated moving average, but the simple moving average is a good target as well for our first line of support. Of course, we would have to break through this 50-day SMA before we did that. But this is just something I drew, and if I'm feeling lucky, I might enter a little back in at that point, just to capitalize on any sort of a bounce. I don't think my current view, and that could change, is that we're not going to go much higher than 670, 700. So we could come back down here, dip back down, uh, trick everybody, go back up. Everybody thinks we're all good. Enter into this target one more time before either sideways or more down action ensues. Of course, this uncertainty is causing fear to enter back into the market, and you can see this noted on the VIX. We are at new highs since really April of 25. That was this last year. So yeah, we're spiking again, and anytime you spike like that, regardless of what the dollar is doing, unless it's really rocketing or dropping, fear is going to be your main index to kind of determine what the market is going to do. And as the VIX spikes, we should see some kind of pullback in the market. And by the way, guys, I promised only 4 or 5 indicators, but I'm going to jump over to oil. When the market pulls back, commodities tend to pull back with it. So here's a chart on oil. Oil is getting uh, really drained here. And so oil is dropping. Now we have gold, and I will jump over to that. The reason gold is spiking is number one, because of the weakness of the dollar, and because the dollar is recognizing that the US really only has the Trump administration really only has the power to print more dollars. And in fact, that's what Trump has run on all along, is inflation. He has no power over the Federal Reserve, so all he has is manipulation tactics, and that is really what this tariff war is all about. uh, but threatening to tariff China is probably the wrong move, because they have the corner on the precious metals market. And if they have the corner on the precious metals market, you can't print more precious metal. You can only print dollars. This, therefore, means that the precious metals that supply our military are in high demand. And of course, if you're China, you're not going to negotiate this type of resource with the US, who is already threatening a war with you going into the future. So therefore, the U.S. is not the bully that they once were, and I don't think this strategy is going to work out. The market is recognizing that, along with ID and implementation in various different countries, real ID, people are fleeing to things that really matter, like gold, and that's why we see a big spike. Nevertheless, you will see many, if not most, commodities will probably drop as the market drops. That's generally the pattern that takes place, of course, with some anomalies, like gold at this point, but there are driving factors in gold that is pushing it up even further. Not only the weakness of the dollar, but also the real ID or national ID, whatever they call that, being rolled out in various different countries. People are rejecting that, and they're buying precious metals instead. All right, now on to Bitcoin. And I'm going to jump to the daily chart first. And actually, I'm going to pull up my Wyckoff pattern. Okay, so I drew this chart and posted it a couple days ago. This is the second part I'm adding to that. Now, I am also, just like I'm not an expert in Elliott Wave, I'm not an expert in Wyckoff. However, the main components of the pattern I can capture and encapsulate. And this to me looks like a Wyckoff pattern. So I posted that before we dropped from, get out an arrow here, before we dropped from this distribution channel. And you can see we have now actually dropped, and we're way down here to a point of confluence, or what is that called on the VRVP? Um, area of, no, not area of confluence, point of control, POC, this yellow line here. That's where there's a lot of volume in the market. However, I do think, the potential remains that we will drop lower and that this is a legitimate pattern that is playing out. Now, this is going to be a surprise to most analysts. Most analysts, if you go on TradingView or any sort of social media forum, are still bullish and are still calling for a buy the dip type of scenario. And that could be. I like this chart. Like I said, I'm not an expert in Wyckoff, and so I could be wrong. But I'm pulling this up because I want you to be aware of something that could exist and might actually be true. Now, I'm going to get out my other charts as well on Bitcoin and show you what else I'm seeing. Okay, first of all, let's talk about this trend line. If we roll this chart up to the monthly and put it in log format, you see a trend line here from 2023. Look at this, guys. We are breaking that trend line as we speak. That's not to say that on the monthly we won't close higher, but as of now, it looks like we're breaking that trend line, which means, of course, further pullback could be expected. So guys, in the next part of the video, I actually messed up and I had my chart in logarithmic view for about 5 minutes before I noticed. But I will begin to talk about the importance of this pi cycle top trend line. And I also quickly explained what it actually was. It is whenever the 111-day moving average comes up to touch the 350-day moving average times 2, that indicates a top. Let me show you what I'm talking about here. All right, so this is my chart. I took out all the other indicators. Let me get out an arrow. And the pi cycle top indicator, if you're not familiar, has called the last 3 or 4 cycle tops with great accuracy. So here you see in yellow the 111-day moving average. Once it comes up and touches that 350-day moving average times 2, that is called the pi cycle top. And it's very interesting. If you divide 350 divided by 111 is 3.14, and that's why it's called a pi cycle top. And you can see it called the top here in 21, called the top back here in 18. All right, the 111-day moving average came up, intercepted that 350 times 2, and actually it also called these, which is pretty cool. And it's done that fairly accurately. You can see here the pi cycle low came a little bit low here in 23. It came a little bit lower than what the cycle low indicated, but overall it's called the tops and the bottoms with tremendous accuracy. So what I did in the next portion of the video is I took this trend line from our previous cycle top in 2018, intersected when the cycle top hit again in 21, and then all the way up to where we are currently. And this is why I'm stressing how important this trend line is, and it is acting as resistance. Now, to be fair, I think eventually that must break if that 111-day moving average is going to intersect that 350-day, which is way up above 200,000 right now. So all trends do break at some point, but in the interim, I do see a little bit of a pullback. And that's all I wanted to say about that. Okay, now it gets a little bit noisier as I enter all my additional daily drawings into the chart. Ignore most of those. One thing I do want you to note here is this pi cycle top trend line. That's very important, very significant. So once again, yes, Bitcoin definitely could traverse further back. In fact, we're under that 200-day simple moving average right now, and we're on this important blue trend line. But if we break that, come back down to 100, and below that is 96,000. That's the point of control from the VRVP. I suspect we could come, it's quite possible with any pullback or tariff news, we could come all the way back down to 76,000 on Bitcoin before we continue up. All right, not saying that's going to happen, but you need to have that in your cards. That's very important. Resistance, and it you can see we tagged it 3 times and dropped. All right, so I suspect further pullback is underway. Hopefully you enjoyed the video. Until the next one, peace, y'all.